Hey y'all, hey, it's your girl Delisa Robinson, the real estate diva out here in these real estate streets, y'all. Listen, okay, today we're going to be talking about funding your real estate deal. Yep, funding the deal because a lot of people come to me and they say, "Oh, well, I want to learn about hosting. I want to learn about creative finance strategies. I want to learn about this. I want to learn about that." Well, part of creative finance strategies, you still can get loans. You still can have. Remember when I was on live with you guys with Kyra before, we had talked about stock loans and we were doing all that stuff. So we're going to get into it today. So if you can hear me, put the number one and drop the number one in the comments. If you can hear me and see me, drop the number two because you want to see me, I want to see you. That's how it works. All right. So I need you guys to be active, interactive, share the live, share, like, and if you're on YouTube, subscribe because we are going to get started in just a couple of seconds. First, I do have, let me check my notes because I know I got a lot of notes here. When y'all see this notebook down, I'm like, what? That girl tripping. Okay. Now, first and foremost, let me say what I got to say. Now, before we get into this, I have to advise you that the Get Wired Wholesale Academy, the 12-week wholesaling program that it's our 12-week wholesaling. Hold on one second, something happened here. Oh, no, I don't want to see it. Okay, now the Get Wired Wholesaling Academy is a 12-week program. For 12 weeks, we are live 2 nights. We actually have our class tonight. We have 12 weeks of live training on how to wholesale real estate. Does it really take that long? No. But I'm not just going to teach you how to wholesale real estate. I'm going to teach you how to build a wholesale business. And I have to stress that. And we're going to be teaching you guys how to use your wholesaling business and float creative finance finance strategies for your business as a whole. So that's what we're going to be doing. Now, also it's not too late to join, even though tonight will be session 4. Tonight is the night we are just getting into the numbers. We're going to start talking about the buyers numbers and things like that. So if you're still interested, you can click the link in my bio if you're on Instagram. I'll drop the link for you guys on YouTube, LinkedIn, and Facebook. I'll drop the link for you guys. So I want you guys to just know it's going to be, we've got people only on week 2, session 4. I already have people who have gone to see properties. We have people who are in the process of needing some numbers to get ready to write some deals. So if you want to join us in there, you can click the link in my bio, tap the first button. Yes, we do take Afterpay, Affirm, and Klarna. Believe it or not, yes, we do. Now, second thing, here's a big announcement, and I wanted to say this before I get into it because this is going to lead to why I am getting into all of these things. On August 15th, 2023, your girl, me, will be offering funding for your real estate projects. I've partnered up with a bunch of different lenders that are willing to give you loans, whether you're new in business, seasoned, need funding, don't have a lot of money down. We have all the loans that you will need in order to get you started. So I wanted to tell you guys that. So make sure, if you can, like I said, on Instagram, I'm not sure if you guys hear me. Can you please drop the number 1 in the comments if you can hear me on Instagram? And like I said, we're getting ready to do some big things. So for those of you who don't know me, this is your first time here, don't let it be your last. And if you've been here before, thank you for coming back. I appreciate you. I am Delisa Robinson. I will be, if I'm not already, your favorite real estate diva out here in these real estate streets. Okay? I want y'all to know that. In these real estate streets, I am your girl. Okay? Not only am I going to teach you how to build portfolios using creative finance strategies, I am also going to be able to lend you money in order to do this. I'm going to be able, I can actually coach you, help you. We have a lot of good things coming on in the second half of 2023. We have the new lending program that's going to be starting on August 15th. We have the Airbnb concierge service that has been revamped and re-rolled out. And so you are in need of an Airbnb that is completely furnished, and all you have to do is plug and play. And that's what we're going to be doing. So August 15th, everything's going to be rolled out. So please like this comment, share this comment, and put it out to the people, however you want to do that. Okay. Now, first things first. And like I said, how long I've been doing this for a while. And in a few weeks, as far as my attorneys told me, in a few weeks, I will be able to explain the $350,000 deficit, the negative. Because remember, we talked about that before, and everyone's like, oh, what's the update? What's the update? Well, the update is I've got the 350,000 down to about 140, 130. And over the course of the next 60 days, it should be completely wiped out. That's what we're hoping for. Okay. So now today, just to give you guys some insights. So that's what we're going to be doing. So today we've been on this talking about how to use creative financing, how to do creative strategies and things of that nature. So what I want to tell you guys right now, what I want to show you guys right now is this. I want you guys to see that you can afford real estate. Okay. Now let's talk about this. I saw this on one of the social media outlets. I can't say which one it was. And we were talking about Joe Biden. Joe Biden's new program to give individuals and families up to $25,000 in first-time home buyer assistance grants. Yep, y'all heard me. I hope y'all heard me what I said. Joe Biden has a plan in place. It's called the Down Payment Toward Equity Program. He has allocated for the 2024 for the United States budget for the year of 2024. He has allocated $175 billion. That's billion with a B, $1 billion to this program. Now, here's what you have to do. You get up to $25,000. You get the funds at closing. So it's not even that you can actually use this money and put it right back on the mortgage, just straight to the principal. So you can use it that way. Or you can use it towards the down payment cost or whatever, and then you'll just get a check what's left after that $25,000 is done. Okay. Now, this is a first-time home buyer grant. It was originally proposed to make home buying more accessible for low-income or otherwise disadvantaged people, individuals and families across the United States. Now, I'm going to be looking at my notes because I want to make sure I quote this correctly when I say this to you guys. Okay. Now, $175 billion has been allocated for the United States budget proposed for the year 2024. This budget is going to go up to $25,000 per individual or family per loan. Basically, is how it's going to do it. Now, I'm going to say, because I didn't read anywhere where you couldn't do this, husband and wife, two engaged people, you could do this, but the only thing is you do have to live in this house. You cannot own it. You know how some grants they give you have to own it for a certain period of time. These grants, you actually have to live in property for up to 5 years. Okay. Now, it has not been passed, contrary to a lot of media outlets and a lot of social media outlets. This law has not been passed yet. And that was as of today. I double checked it, triple checked it, quadruple checked it. This law hasn't been passed yet. So the down payment toward equity program was originally proposed in 2021 by Maxine Waters, the representative from California. She originally came up with this bill. It's been going throughout Congress and all over the place for the past 2 years. Now they're saying by the end of this year, For those of you who are new to the stream, I live down the street from a nursing home. So you're going to I hear sirens every day, all day. So hear them just a moment. We'll get back to it. Okay. Now, $175 billion has been proposed. Eligible applicants will receive up to $25,000 to the purchase of their first home. That's number one. That's $20,000 in assistance, and then an additional $5,000 for those who are considered socially or economically challenged. Okay, that's working. Now, the income guidelines will have to be met. So you're going to have to prove that you're disadvantaged. This is not like a no-doc loan where you can just use bank statements or nothing like that. We'll get into those. I'll get into one of those programs right after this, but that's different. Okay. This bill has not passed. Like I said, it hasn't passed yet. So if you want it to pass, contact your state and federal representatives and get on them and tell them, hey, you want this to go through. But they are predicting that this bill will pass by the end of this year. Before the end of this year, it will pass. So that's it. It's called the Down Payment Toward Equity Program. And yes, I'm going to leave this live up. So if you guys want to keep it up, you want to share it with your peoples and your friends and all of that stuff, that's great. Do that. Okay. So they are predicting that this bill will be passed before the end of this year, but it has not passed yet. Okay. Now, where did I get this from? Yahoo Finance, of course. So you can go back and double check my story if you want. That's that. Now, as for my homeowners, because I get a lot of people asking me, hey, I know you always talk about invest, but do you do anything with homeowners? Yes, I am a licensed broker with the state of New York and submitted my application today for the state of Georgia because I need to make some moves and get my sister moving. She don't want to do real estate unless I'm there with her, holding her hand or telling her what to do. So no, I'm not moving to Georgia. Just let's be real clear. It's not a move, it's an expansion. Because a lot of people always want to say, oh, are you moving to Georgia? No, I'm expanding. Okay, that's the difference. Now, so I am a licensed broker, which means I own the real estate company. I have agents that work for me or work with me. I don't like to say for me, even though I am the boss. I don't like that phrase. Okay, because we work together to get these deals done. Now, so will some of these loans help? 99% of my clientele are investors. My agents, however, deal with a lot of first-time home buyers, home buyer programs, and things like that. So we are full service. We are a one-stop shop. You can come here. We can refer you to lenders, lawyers, title companies, whatever the case may be. Okay, now for my investors. So yes, to answer the question that was asked to me in my inbox, yes, I do help homeowners. Now, this is number 2. So everybody, if you can, put a 2 in the comments so I know we're on loan funding source number 2. Funding source number 1 is for homeowners. This next one is it's mainly for investors, but individuals can work on this too. So drop the number 2 in the comments and I'll let you know what this is going to be. Now, a lot of you keep hearing no doc. What is a no doc loan? A no doc loan is just that. It's a loan for a mortgage that you do not have to show your financial documentation for. You can use bank statement. If your credit is good enough, you can just write your income down on a piece of paper and get a loan. Okay. So that's what no doc is. No docs means no financial documentation. You don't need a W-2. You don't need a W-2. You don't need a tax return or pay stubs. Okay. Now, let's be real clear. No doc loans are non-traditional loans. Number 1, they are not backed by any federal government. They are backed by lenders. Okay. So none of your typical, so we already talked about none of your typical financial documents are needed so you need a W-2, you don't need your tax returns, you don't need your pay stubs. That's what a no doc loan is. This is a bank statement stated income loan. Okay. This is for people with inconsistent income. Now, what is inconsistent income? Okay. Inconsistent income is people myself, real estate brokers, we work on commission. This is our only income, is our sole source of income. We work on commission. So you would have to, when we get our commissions, it goes into our bank account. Whether you have your brokerage pay you by individual or pay your LLC, either way, that is your income. So real estate agents, self-employed, people who get 1099s, people who are kicking butt selling Mary Kay, Tupperware, and all that other stuff, this loan is for you. If you are a truck driver, you have inconsistent income. If you are an entrepreneur, if you are whatever, anything, and I'm going to say, you know what else? The gig employees, the giggers. So the people who work for Uber Eats, DoorDash, who drive in Uber and Lyft, this is for them. Thumbtack people who do thumbtack, people who clean houses who might not have consistent income. This is for you, okay? These loans are considered non-qualifying mortgages. So when you see non-QM, that's what that stands for, a non-qualifying mortgage. That means they are not backed by Fannie Mae or Freddie Mac. Okay, most mortgages are backed by Fannie Mae and Freddie Mac. Okay, so things like the loan amount, the debt to income ratio, and proof of income, those aren't going to matter. They don't matter. Okay. Now, these loans have a negative effect too, because at some point in time, some of them may have what we call a balloon payment. Now, let me explain a balloon payment to you. And I got to keep my eye on the clock because I got to teach a class at 7. So I'm not going to be on here much longer because I still got something I got to get done for that class. So if you are getting, when I say a balloon payment, that means in your terms, it may say, hey, I'm going to have this loan for 3 years, and then I'm going to pay it off. So you will also be, in some cases, those 3 years worth of payments will be interest only. Because remember we talked a while ago, we talked about why traditional banks don't like lending to real estate investors. And the reason for that is because a real estate investor is not going to have that loan long enough for the bank to make money off of it, which is interest. So what the hard money, the non-traditional bank lenders do, is they give you that money, but you pay the interest up front for XYZ elemental P years, and then you have to balloon payment. So that's where you have to do the BRRRR method and refinance it, or you just refinance it outright for the equity, or you might flip it, sell it, and write off. That's why those loans are out there for us. Okay. Now, when you apply, you will supply your lender with bank statements. That's all you have to do, supply bank statements. So for those of us who are self-employed or employed by our business, and we might get a pay stub, we might give ourselves a paycheck that way, but you will have to provide, if you're a business owner, you will have to provide your personal and your business bank statements. So it's awesome for you, actually, if you want to, because these loans can be put in your business name. So and another bad thing about these loans, one thing I wanted to tell you guys is this. Remember how we talk about funding, talk about structure. Your business structure is going to matter heavily with these loans. Number one, they're going to look for if you have the number of employees you might have, the type of business you're running. They might even want you to have a physical location. These are some of the things that they may want to consider because you're only showing a bank statement to prove that you have this. Okay. Now, there may be a prepayment penalty too, along with that balloon payment. So say a year from now, you want to refinance because interest rates are down. Well, that will hurt you because it's going to make you have to pay. Y'all see all these notes? It's going to make you have to pay a penalty for paying this loan early. Okay, because the bank wants to make as much money as they can, and the interest is the money to the bank. The bank don't want their own money back. That money isn't theirs. That's the depositor's money. So that's different. Okay, So now, depending on your credit score, you will have to do a down payment, and depending on your credit score is how much of a down payment you will have to do. Now, the minimum is 10%. I don't care what it is you got to do. You're looking at a 90-10, and at the highest, I think it's 20%. So anywhere between 10 to 20% is what you're going to have to put down on a bank statement, a stated income or bank statement loan. Okay. You can qualify with as low as a 620 personal credit score. Okay. I know everybody's like, oh, what I was told I could buy a house with a 580, and you can through FHA, but anybody else wants you have a minimum of 620. And I can guarantee you at a 620, you're gonna have to put down 20%. Now, keep in mind, and we break this down for you guys all the time, keep in mind you have 20%. That's just the down payment. That doesn't account for cash reserves. It doesn't account for home inspection. That doesn't account for appraisers. It doesn't account for the points that you're going to have to put up when you go to close. So please stop listening to these people when they tell you you only need 20% down. That is not true. Okay? So please stop it. All right. Now, some lenders will require you to have at least a 645. So you have to, or a 640 or a 645 credit score. So you have to find a lender that's going to work with what you have and not against you in some cases. Okay. Okay. Now, how many bank statements will you have to? Up to 2 years. Up to 2 years. So that's good if you've had a good solid 2 years in business. That's bad if you just started out, because then they might say, well, you have income stated, so we want you to put more down. I'm not saying you're gonna get declined. I'm just saying you might have to put more money down. So that's what I want you guys to listen to and look at. Okay. Now, excuse me. You're going to have to provide, along with the bank statements, you may have to provide a profit and loss statement. That's this, again, stated income. This is why you have to do that. Okay. Have cash reserves. They suggest up to 3 months. Some might want you to have up to 6. So between 1 to 6 months worth of cash reserves. And the cash reserve is whatever the monthly payment is times 6. Now, this is stated. This is different from the DSCR loans. We're going to talk about those probably tomorrow. And if we do, it'll probably be tomorrow early in the day, because I know I got some things I got to get done. Okay. So we have cash reserves. Your debt to income ratio can be at up to 55%. For these stated loans. They do a DTI. I know they say, oh, the DTI doesn't matter. Don't believe the hype. But you can go up to 55% for some lenders. Some lenders, it won't matter. And some lenders will say we don't want anything over 45. Some will say we don't want anything over 55. So you have to look at that too. And you're going to have to provide everything for your business. So again, when I say your business structure, your articles of organization, your operations agreement, your DUNS number, if you have it, all of that stuff is going to matter. You're going to need, you're always going to need, anytime you go for a real estate loan, unless you're doing a pre-approval, you're going to need a copy of your fully executed real estate contract. What is that, Lisa? Okay, let me tell you. That is the contract, the purchase and sale agreement that you signed between you and the seller. And it has to, a fully executed one is the seller has signed it, the buyer has signed it, the attorneys have approved it if that's required in your state. And the title company has a copy of it and they're running title. That's a fully executed contract. And that has to go to the lender as well. Okay, with all the disclosures for the house. So if you are doing this through, if it's on the MLS and you have all the disclosures, you're going to need all the disclosures of the house. Okay, so like I said, this no doc bank statement loan, and I'm going to go over some other fundings for you guys later this week too, later and over the weekend too. The the small business owners, the freelancers, the gig workers. And when I say gig workers, you guys know that's Uber, Lyft, uh, deliveries, Amazon, whatever it is. Those, I mean, and the DoorDash, what is it? DoorDash, Grubhub, Uber Eats, all that, those type people. Those people are called gig workers. The people on Thumbtack who just take a gig, that's a gig worker. Okay. So that, and real estate investors, that's what this loan is for. So that's where I'm going to stop for today. Yeah, because I don't want to get into the other loan types and then not have enough time to give you clarification. I do have about 5 minutes for a Q&A. So if you have any questions, you can drop them in the comments and I'll be sure to answer as much as I can, as well as I can, and as many as I can. So what I will say to you guys is this, like I said before, this is a new day and age for real estate. And the one thing I forgot is some lenders on the stated income loan will allow you to refi. They will allow you to refi an existing loan. Hey, Kyra, how you doing? They will allow you to refi an existing loan. So take a look at that. Keep that in mind when you're doing this. Interest rates are usually high, or, well, they're high right now anyway at 7%. So that's where you want to get to. You want to try and figure out what you're going to be doing with that, how this is going to affect you. So when we say funding, and I'm glad Kyra chimed in because she just her name popped up and it reminded me of something. Remember, we talked about in the beginning, we talked about structuring your business and having your business structured correctly. Remember that. And we said, then you can get those credit cards. Guess what? You can still use those credit cards as your down payment on these loans. Hello, right? That's a good thing, right? Right. Okay, so I don't see any questions, so I'm going to just assume that I gave you guys the information that you were looking for. If you enjoyed this information and you want more, I'm just going to tell you this. Text the word diva to 716-306-3316. You will not only will you receive a free live training, you will receive a free pre-recorded training. You'll also get alerts as to when I'm going live with these trainings. Now, this particular training will stay up. You guys will be able to come back to it, refer back to it for a long time because I'm not going to take it down like I do some of my other ones. But this one will be up because I'm going to just continuously add to it. This is part one of, I think, 3 parts that I have coming up, 3 parts that we got to do. But tomorrow, and I will be back on tomorrow, we're going to talk about the DSCR loan because everybody is asking me about this loan. I've had 3 people ask me about this loan in the past 24 hours. So I'm definitely going to get into deep on the DSCR loan. And I'm going to have you a couple of lenders besides myself. Yeah. So like I said at the top, if you missed it, we are your girl. We're about to get into the lending business. Yay. We will be able to service your loans for these types of projects. So August 15th, the lending division kicks off and we're going full court press. So you will have it. So like I said, if you want to get more content, more live trainings, text the word diva in all caps to 716-306-3316. And that will help you. You'll get live alerts, you'll get live trainings, you'll be a part of the Hammers and Hills community, which is where all my people are. Hey, y'all. And what we do there is in the Facebook group, Hammers and Hills Facebook group. If you want to join us over there, you can join us for that. And we have live trainings exclusively for the group. My Hammers and Hills crew, they get all of the discounts, first come, first serve seats, tickets. I am going to be back out on the road doing live in-person presentations soon. I'm being honest. I don't know when it's going to start. I don't, but I think I have one coming up in September. I am going to be on the Real Estate Invest Her, which is a division of Bigger Pockets. I am recording my segment for them on August 8th. And I also have another event coming up. I know her name is Siobhan, is the event coordinator, and she's got me doing a 30-minute podcast segment for her people. So we are going to get ready to take all of this on the road for the fall and the winter. And that's where I'll be. All right. So thank you very much for joining me today. I appreciate everything that you guys have done. Like I said, if this was your first time being here, don't let it be your last. And if you've been here before, as always, thank you for coming back. If you don't want to miss the next session, which will be tomorrow, I don't know exactly what time yet, but we will be talking about the DSCR loan. We're going to talk about what it is, what it takes to qualify, and who it's for. Really, really who it's for. You guys are going to be so surprised when you get into this. The DSCR loan is so amazing. At first, I was a little leery. I'm not going to lie. At first, I was a little leery of it, but now it's so amazing. You can do this for rentals, flips, Airbnb properties, vacation homes, resorts. You can do it for anybody because this loan is it's not based on your income at all. So we'll talk about that more tomorrow. I'm going to get ready for my class, and I will talk to you guys later. Have a great night. And remember what I always tell you guys, you can choose to be whatever you want in this life. I just hope that you choose to be kind, because at some point in your life, someone was kind to you. And it's always good to pay kindness forward. Not only does it make you a good person, but if enough of us do it, it makes the world a better place. So I will see you guys mañana. Bye.